Anxious traders on Wall Street watched as the Dow sank 10% off its January high. And the rough patch could be just the beginning of a long run of uncertainty.
It could be several months where we endure these types of high volatility.
Financial analyst Barry Armstrong says big swings tend to be exaggerations as anxiety infects investors.
When stocks go high, they tend to go too high on the upper end, like they did in January. But also, when stocks correct, they tend to go lower than is reasonable.
Some traders say the fluctuations are reflecting fears the Federal Reserve may have to raise rates to keep inflation in check. That's a sign of a strong economy, but does not necessarily reflect the strength of financial markets.
I'm confident about the economy. Not so confident about the stock market.
But even with big losses this week, $1,000 invested in a 401k a year ago would still be up $125. So the Dow closed below 24,000 today. The last time it was at this point was in late November. Ben?